All right, here we are. Welcome back, everybody. MSTR True North. We are welcoming Richard Byworth. We're going to get into the mind of Richard Byworth today. And I'm Jeff Walton, the host of today's MSTR True North discussion. We're going to talk about many things. We'll hit on MicroStrategy, now strategy. We'll hit on preferred stock. We'll talk about Bitcoin. Seize Capital has a new lending product. Maybe or not a lending product, a new alpha fund. Maybe we'll get into that a little bit. And just happy to have you back. Our last conversation that we had was on November 20th. The price of strategy at the time was $465 at open on November 20th. The price of Bitcoin is around $94,000. And we're in a significantly different spot today with the price of strategy around $250 and Bitcoin around 82,000. So it will be great to unpack, the mind of the arb trader as a follow-up discussion from where we were, I guess, 4 or 5 months ago. So anyway, Richard, welcome back. Maybe we'll do a quick intro and jump into things.
Great. Thanks, Jeff. I'm really happy to be here again. Our last chat was really epic. So I really enjoyed it. I think you always ask fantastic questions. So I think we can get into the meat of a lot of the things you outlined. But maybe just give you a quick update since last time. So
now managing partner and head of liquid alternatives, right?
That was my role last time.
Okay,
I've been doing that for about 2.5 years. But since we last spoke, launched another fund. We did that launch 10 days ago, and you'd actually been one of the first people to sort of get an inkling of it on Twitter or X a few days back when you were like, "Has anyone got any ideas on how to accrete yield in Bitcoin?" And so I said, actually, funny you should say that. We've just launched a product, but so we announced the product actually Monday. What are we, Wednesday? So 2 days ago. We launched with 2,000 Bitcoin to basic, and we cater to anywhere from OGs to high net worth individuals who aren't completely Bitcoin maximalists yet, to corporates, which has been interesting, miners, and corporate investment teams, as well as some families via their family offices. So it's a real range of investors, and actually it's been interesting too. We've geographically had a real range of investors. Got Central, South America, through to Europe, obviously centered around Switzerland, and then North and South Asia. So it's a really diverse investor base already. We're keeping the fund open for 2 more weeks, and then we're hard closing it simply because we've run into capacity constraints.
Got it.
I mean, the product, just for you to understand and for the listeners to understand, is a fund of crypto hedge funds. So one of the things that Seize Capital does very, very well and has done very, very well throughout its entire evolution and history, coming from a banking group, was invest in hedge funds. Right? In 1996, the first Seize company was founded, which was Seize Bank, and the main product that Eric Seize was bringing to investors was hedge funds. So he was close with the likes of Paul Tudor Jones, Julian Robertson, these types of guys, and so brought those funds to his investors in Switzerland, because his theory was, why can't I access these types of investments through my private bank, right? So Seize automatically became a very alternatives product focused bank, with a base in hedge funds. And we were quite famously, reputed post Madoff, because we were the only bank in Geneva that was actively keeping Madoff out of any investments that were discretionary portfolios of our clients. because Eric had actually been to see Madoff, I think 3 times, and every time walked out of that meeting saying, I don't have a clue what that guy's doing.
Mm-hmm.
So
Yeah.
if we don't understand it, we're obviously not going to
do
invest
it.
in it.
Yeah.
So when I joined the firm 2.5 years ago, the focus was to try and say, okay, there's an amazing amount of alpha in the crypto space. How can we identify that? How can we leverage that into our whole hedge fund program to create the same sort of, or even more impressive type of returns than you see from a Millennium, a Balyasny, a D Shore, a Marshall Wace, these types of very big name hedge funds that are, have been successful over decades. What's interesting about crypto is, pretty basic strategies yielding way above. I mean, we outperformed Millennium last year running a fund of funds in dollars, right?
Right.
So we've been running that dollar fund of fund for just over 18 months. And the reason that we launched this Bitcoin denominated version of the fund was because I had one of my investors who I was talking to a lot, who was a massive Bitcoiner, say, well, look, it's great that you can make me 15 to 20% in dollars, but I'm never going to invest
in
in a
Bitcoin
product like that. Yeah.
Yeah. I need the yield in Bitcoin. Yeah.
I'm never selling my Bitcoin to buy dollars to get 15, 20%. Like, why would I do that?
Right.
So that got me thinking. Obviously, I myself would love a product like that.
Mm-hmm.
So started probably May last year, just sort of thinking about how we do it. Started working with a few of the fund managers that we really liked in our dollar fund and said, could you deliver us these types of returns or this type of strategy, but denominated in Bitcoin? And so slowly but surely, we pulled together a portfolio of those funds and said, okay, we'll have them all ready by the 1st of March. And so that's when we launched.
Yeah.
Was Saturday, 1st of March. And then we got so much demand for it from all that sort of customer base that I ended up saying that actually we breached already the capacity that I'd pre-negotiated with these funds in Bitcoin, right? Because, when I take it to the board, they're like, okay, great. But like, you're already running a dollar fund with these guys, taking a decent amount of their capacity. Right. Are you sure you can allocate? Because we already knew that we were going to get some decent demand for this.
Yeah.
And so I went to each of the individual managers. I said, okay, how much can you viably take without impacting returns? And so we pulled together about 2,000, 2,500, slightly inside of capacity within those funds. We obviously, as we rejigged the portfolio, that's why we ended up slightly over capacity with some of the funds. But so that's why we're hard closing the fund on the 1st of April. Just to see the managers play out, see that they can continue to get the sort of returns that we've witnessed from them. But, if you look back at what they did with their Bitcoin strategies, we're talking about on a portfolio aggregated basis, net of all fees, 8-9% in Bitcoin terms.
Bitcoin yield, 8-9% Bitcoin yield. Okay.
Which is phenomenal.
That's crazy good. Yeah, it's crazy good. So I've got so many questions.
I'm just going to add one more thing, Jeff, just before you go. And that is with a volatility of less than 2. So that just shows you the risk profile of this product. It's just slow accreting returns. It does look almost like a bond profile return. It's not yield. You are putting capital at risk, but the volatility is just so low. So the Sharpe ratio ends up at like 2.5.
Yeah.
So it's really remarkable.
Wow.
And so anyway, sorry, I didn't want to.
Well, no, it's fascinating, right? Like my takeaway, I went to Bitcoin Investor Week a couple of weeks ago. My takeaway from that entire week was there are people that have tons of Bitcoin and $0. If they're a Bitcoiner, they've got $0, right? Like they've sold all their dollars and they're starving for yield, and they're starving to put that capital at risk, but in a way that with a low probability of losing their Bitcoin or getting over leveraged. So it's like it's the nut that everybody's trying to crack. And a lot of the market is really focused on this lending perspective, right? Like trying to find capital to do lending. But there's other pools of capital and other ways to get this Bitcoin yield in different areas of the market. It sounds like you guys have found an interesting one. So my question is, the Bitcoin comes into the fund via as Bitcoin, right? It's held in custody at Coinbase, and then it's used as collateral in some regard for some, like when it's being put at risk. And I get that it's multiple hedge funds that are doing this. What is the risk that it's being put against, and who's accepting the Bitcoin as collateral, right? Because that's the nugget, that's the golden ticket, is the Bitcoin as collateral, right?
Exactly. So these are crypto native hedge funds, right? Now, many of them have come from traditional finance. So within the portfolio, we have managers that are ex-Citadel, ex-Glencore, the commodity trading team, ex-Brevin Howard, ex-Millennium. So these are guys that have come from the traditional world of hedge funds that are now operating within crypto.
Yeah.
And so they understand, importantly for us, what being operationally sound looks like, i.e. being an investment grade hedge fund. This is very important to us. So we do like 2 to 3 months of due diligence on these underlying managers. But to your question, so I'll talk you through the flow. So we obviously were very conscious of the fact that if we had an investor that sent us funds that were tainted and they sent it direct into the fund wallet, then that taints the whole fund, right? So we've got to be very careful about this. So what we do is every single investor gets their own subscription wallet.
Okay.
That wallet sits in sort of like an
overarching
bike spoke sort of set up outside of the fund. And then once they're cleared by our administrator, because our administrator tests the provenance through the blockchain, make sure that they're not, been used on the Silk Road or, these types of things, dark web, etc. And so then once they're clean or deemed low risk, then they are cleared to be sent to our fund.
Yeah.
So the fund sits in the middle of it all.
Wow. All right.
Yeah. And then once we take the allocations for that month, then we look at the portfolio of the funds and we go, okay, we want 10% in that fund, 15% in that fund, whatever it might be. And then so we'll break down what's remaining in the fund wallet and send that out to those managers. To your question, then it's different depending on the manager. So some managers will use that Bitcoin as collateral sitting off exchange in a copper clear loop type solution or a hidden road type solution. And then they're getting funds replicated onto the exchange, which they can trade with. And they can implement, be it a statistical arbitrage strategy, a basis trade strategy, volatility arbitrage strategy, market making strategy, or a DeFi arbitrage strategy. So those are the 5 core strategies in the portfolio. We don't do any lending.
Yeah, right.
But they might borrow against the Bitcoin onto the exchange, for example.
Got it. So, it's arbing perpetual futures. It's all sorts of credit spreads or identifying arb opportunities.
Exactly.
In the crypto native ecosphere. And when it goes from Bitcoin into these hedge funds, are these hedge funds operating on other cryptocurrencies or digital assets as well? Or are they, or is it just Bitcoin?
It depends on the strategy. So basis is generally heavily dominated with Bitcoin. Same for volatility arbitrage.
Yeah.
When you get to statistical arbitrage, I mean, that is a portfolio of different currencies.
Yeah.
And then same with market making, our market making strategy, we only have one pure market maker in the portfolio. And, they're doing 3,000-4,000 trades a day across a multitude of different currencies, perpetuals. Yeah.
Yeah.
So
Okay. So
future related
I
products.
get it. Wow. That's fascinating. So it's diversified in and of itself because each fund is kind of running their own like arb strategy. They've got their own thing that they're doing, and you're just providing more capital so they can do it on a larger scale. But
Absolutely.
I get the sense on, you know, why you're cutting it off, because at some point there's, you know, it's like you may not be able to use or leverage that capital enough to get the, you know, the identified yield that you're hoping to get, or whatever that may be, right?
Well, actually, to be honest, we're less concerned about the return. We're more concerned about the risk. So
security, safety, downside. Yeah.
It's more the downside element. The security, I mean, the governance structure that you can put in place with Coinbase is absolutely phenomenal. And obviously, on each of the underlying funds, we do very deep diligence on how they can manage the funds and how they can move the funds and how they can initiate a new wallet for the funds, for example.
Yep.
That's very important because that's a how do you steal my money question.
Yeah, right. Yeah, exactly.
You know, if you've got a portfolio manager that could create a brand new wallet and suddenly start sending funds to that wallet, I mean, that is, you know, there's a big red flag. Yeah, exactly. So we look into every aspect of how the operational process of these funds works. But when I'm talking about the risk, I'm talking about the risk in the performance side of it. And we're very, very cautious in the strategies that we're allocating to. So, for example, on the dollar fund, we have trend as a strategy in the portfolio. We have long short as a strategy in the portfolio. These are highly volatile strategies. We don't want them in the BTC fund because for us, it's way more important to protect capital. So anything with a high beta profile to the market, kicked out of the BTC portfolio. Yeah.
Yep. Got it. Makes sense.
Very focused on market neutral. Yeah.
Wow. Well, congratulations. It sounds like a fascinating fund. And 2,500 Bitcoin, around $200 million raised. And I suspect that's that's probably going to get much larger over the next, couple of years.
Yeah, I'd say so. Well, I mean, even if we don't raise any new capital,
8% BTC yield. Yeah, 8% BTC yield is also fantastic, right? I mean, you see companies like Strategy and Metaplanet that are putting up these BTC yield numbers that are just astronomical, and like 70, 100%. And you really sit back and you think about those numbers, realistically, those are massive yield numbers. Right, like 100% BTC yield is just incredibly massive, because you're leveraging your portfolio as collateral to get that yield. Right, it's very difficult to do on your own without taking significantly more risk than some of these other corporate entities are taking. Yeah,
the yield thing, and I guess this brings us on to the Metaplanets and the MicroStrategies. The yield is very, very interesting. I mean, we were talking last time, as you said, I think mNAV was probably around 3.5.
Yep.
Maybe even it got to 4, right? When it hit that 5.
The next day, the day after we said
it. Yeah. But the interesting thing about Metaplanet, and I've been looking at this a lot lately, and I speak to Simon quite regularly, is that you've got a company that is in a very large market. The market cap of it is absolutely tiny in relative terms when you look at a strategy. And it is the only Bitcoin play for these Japanese investors that want to be in the Japanese stock market, which is a $6 trillion market,
right?
Which is, it's 10 times smaller than the US stock market, but it's the only option.
Right.
And it's tiny by comparison. So to your point about yield, that massive mNAV that you have on Metaplanet just naturally, because it's the only outlet for the Bitcoin demand. And we can talk about Japan because there's some intricacies around Japan that make Metaplanet's niche there so significant. But just for a moment, just to focus on that, they get I looked at them recently, they were on a 5-6 times mNAV. They got as high as, I think, 12, right? When you're doing they don't do ATMs in Japan, but they're doing it via a warrant that settles at the end of the day, and they sell the stock the day after. But basically, you've got a situation where you are massively, I mean, we've talked about accretive dilution before, but this Metaplanet's accretive dilution is absolutely astronomical when it's dealing with an 8 times mNAV. So,
right.
you know, they've been aggressively going into it. Even, you know, this period where you've seen Saylor be very quiet because he doesn't want to hammer his stock any more than is already being hammered. Whereas they're at such a huge mNAV, they're like, we're just going to keep going, which is great.
Yep.
And so they're just ramping the yield on the stock. So it's really a very, very interesting stock. And I did flag it the other day that I think it will be the biggest accretive yield again this year.
Oh, yeah, probably.
Because it's on its own. I think I was speaking to someone that operates in Japan. The ETFs are unlikely. I mean, Japan moves very slow. I worked in Japan for 5 years, and it moves very, very slowly. They are likely to not have they won't have an ETF this year. I think would be optimistic to say that they'll get it early next year, but it's possible. So when you think about, they have this thing called NISA accounts. So a NISA account was something that was introduced in 2016, which is a tax-free way to allocate into the stock market. We have it in the UK as well. It's called an ISA, individual savings account, where you can put, I don't know, £10,000 a year into that and be capital gains tax exempt. That's what the NISA accounts are in Japan. You can only buy Japanese stocks. So again,
you're stuck. You're stuck in that system. It's the architecture of the system is lending itself to an increased mNAV that they're able to capitalize on. Wow.
Yeah,
that's fascinating.
Yeah, absolutely.
And
so sorry, go on.
Yeah, Ben Workman has talked about there not being like short selling isn't allowed in the Japanese market, or it's limited in the design on how they can short the stocks. So
it is allowed. However, you've got a couple of things, and he's right. So you have a short sell exemption when you own, for example, a convertible bond. So short sell exemption means that you can sell into downticks. That's right. And then the normal short sell, you're not allowed to sell unless it's into upticks.
Yeah.
So you can only short sell into upticks. Right. So you won't get this sort of short sell induced panic. Yeah, exactly. Yeah. So it's only convertible bonds or other related instruments that require a short sell hedge that have the exemption that they can sell into downticks.
Got it.
So look, I think Metaplanet will issue a convertible bond at some stage. I hope that they will end up working with my former shop, Nomura, because they are the convertible bond house in Japan. So I think that we'll probably see that, but probably not for a year or two.
Well, I mean, if they're able to use these other avenues for generating BTC yield, and it's not going to put downward pressure on the stock when the stock is moving down, you have no incentive to do it, right? I mean, there's no reason to do it until you really needed, until you wanted to tap that pool of capital, right?
Well, the volatility is insane. I mean, if you look at the beta of strategy to Bitcoin, it's like 1.5 times.
Yeah.
The beta of Metaplanet is 3 times.
Right.
It's absolutely insane, the volatility. So you do want to be harvesting that to some degree. I mean, one of the things that Saylor's really benefited from is having a company that is $100 billion, or today, what is it, 80 billion, that is, the volatility is driven by a $2 trillion assets volatility, right? That's the hack that he's tapped into, right? Now imagine you're $1.5 billion company like Mesoplanet being driven by
Yeah,
$2 trillion. It's absolutely insane power that is being driven into that stock. So you want to harness it. You want to get some value out of that optionality. Right?
Bitcoin really is the nuclear core, right? It is the nuclear core that's just shoving this energy into these equities, which is causing the volatility. And if you shove a ton of energy into something really small, it's going to bounce around more. Yeah, it's going to be more volatile. Makes sense.
Absolutely.
Wow. Okay, so let's talk about convertible bonds a little bit more. Let's get into strategy, because since we last spoke, strategy has now been included in QQQ, NASDAQ 100. There's potential for inclusion in the S&P 500 sometime in 2025 if the price of Bitcoin goes back up, into high 90s, low 100s. And we've seen the stock come down drastically, right? It rose like a meteor up to 500. They raised something like $20 billion of capital in 40 days. MSTR has now been the 10th largest publicly traded equity by volume. And now we've seen the stock come back down to the 250s. So, which, I went back and watched our episode before this, and you had mentioned, all of these arb traders are delta neutral, when the price of the stock is so high. And you said the words, what they're hoping for now is a crash, for it to go the opposite way, because they're going to go arb it in the other direction. And what did we see? We saw a crash, 50%, 60%, down to 250, where it's at today. So if you could just walk me through the mind of the arb trader on what's kind of happened in the last 3 or 4 months, and how are they feeling right now? Are they happy? Are they frustrated? Strategy makes up 30% of the global convertible bond market these days. And is there room to potentially grow that, because they've got significantly more that they want to issue? Sorry, a lot of questions there, but I'm just going to kick it over to you now.
Yeah, no worries. Let me try and remember them all. So first of all, when we were talking, he had, what was it, 6, 7 convertible bonds outstanding, and still does today, because he's called one but issued a new one. So exactly. So basically, I think we were looking at the majority of the MSTR universe were 100% to even 200% in the money. On the strikes of the convertible bonds, right? So if you imagine, and I really would love to show you the curve of a convertible bond. So let me. We're
going to go back to it. Okay.
Yeah, let's try and do this, because for me, when I was a junior trader, like trying to work out convertible bonds, it was really this visual that helped me understand. So if you think that you've got the bond floor, we call it the bond floor, that's the payoff of the bond floor, right? And then you've got the conversion price that hits. So the price is going this way, right? As the price goes up, you've also got the price on the x-axis, the y-axis going up here. So the price of the bond goes up in line, if we're looking purely at the payoff, right? So the payoff is at maturity, right? So you've got, I'm doing it the wrong way around for the camera. Let me try and do it the other way around. So it's like this, right? So x-axis, price going up, y-axis, price of the bond going up. So this is the bond floor.
Yeah, you've got the floor, because because it's the debt. It's the debt downside, equity upside. Following.
Exactly. So bond floor. So the minute that the price goes below the conversion price, the bond floor supports the price of the convertible bond, and the price just keeps going down. I'm going the wrong way. I'm going the wrong way again. For the screen. But basically, the idea is that if it's very in the money, right, you're all the way up here. Volatility means probability, right? So probability that it will close below the strike price is getting quite low, right? So your delta becomes a replication of the probability that volatility can pull it all the way down. But as the probability gets lower, you hedge it on more and more shares on the way up, right? Because if you think about it, the price change of the convertible bond is the optionality. Right? Optionality reduces as we get closer and closer to maturity. right? So you're thinking about various different Greeks, one being theta. Theta is time decay.
Yep.
The time decay of an option massively increases as we get closer to maturity. It just collapses, right? So you end up with an option that has value. Sorry, I need some graphs. But basically, you've got this in the money option that has value, right? And
Yep.
then as you get closer and closer to maturity, that value just keeps dropping and dropping and dropping until you get to the firm payoff,
Right.
right? And that payoff will be either the bond floor or the stock above the conversion price.
Yeah, the equity value above the conversion price.
Yes,
Yep.
exactly right.
I follow along.
So you're always trying, as a convertible bond trader, you're always trying to calculate the probability that you're going to end up in the money, and that is demonstrated through the delta that is given to you through your Black-Scholes model or whatever model you might be using to try and essentially estimate that probability. Okay.
Yep.
So as delta changes, remember delta being probability that you're ending up in the money, as delta changes, you keep hedging to change your exposure, right?
Yep.
You don't want to be on a 40% probability that you end in the money hedge when it's actually the model's telling you it's an 80% hedge, because that means you've got massive swing risk in the underlying price of the convert, because the price moves of the convert moves in line with the delta.
Right. Yep. Okay. Yep.
As it gets closer and closer to being a stock, it moves like a stock. As it gets closer and closer to being a bond, it moves like a bond. So that's the factor that you have. It's the curve, exactly right. And that curve becomes less of a curve as you get into maturity, and it gets to be
with the time element.
Exactly. It just fits to that. It's either out the money and it's bond, in the money it's equity, right?
Got it.
But as you've got time, it's like it's got this curvature to it.
Yeah.
That looks like a very smooth curve.
Yeah, probability curve. Yep.
Exactly. Okay. So that's when you're sitting there going, okay, it's up 10% today. I need to sell 5% of delta, right? Because my delta shifted by 5%. Right. And that's what they're doing. So imagine those bonds that we were talking about, when they're on 100% delta, essentially they're 98% delta. What's the best thing that can happen to them for the convertible bond trader? It's certainly not that it keeps going up, because then all you're doing is the convertible bond trader
more and more.
You're like, okay, maybe I'll sell 0.5% to get me to 98.5% delta, right? But it's not very exciting. What you want is a massive change in delta, because that's how you are making money, right? So the massive change in delta comes from the price retracing back all the way down, right? And getting close to that conversion price, which means you're getting closer to it bond value, but you're sitting on a very nice heavy delta, 98%, but the probability delta is now 70%. Great, I've got to buy back a load of stock. What is that making you do? It's making you sell stock high, buy stock low. So much more profitable if the change in delta, the gamma, is big.
Yeah.
So the gamma is the biggest at the conversion price, right? That's when it's flipping from an equity to a bond.
It's like,
right? So exactly, right?
Yeah.
So your delta, imagine your delta at maturity, let's say your strike is 250, and at maturity, you go from 251, 100 delta, to 249, 0 delta.
0, right, yeah. So it's just flip-flop.
It's just like, boom, boom. Imagine trying to manage this. We call it gamma trading. Like, it's insane, like, as you get closer and closer to the maturity. But you want it at that strike. If you're all the way up at $1,000 in the stock, that's not interesting at all, because it's not changing your delta. You're definitely going to land in the money. So it doesn't change anything, right? And that's how these convertible bond traders are looking at the world.
Got it. Wow. That's so I'm looking at some of their convertible debt right now, and they've got a 2031 that's got a 233 conversion price. So that was flirted
Beautiful.
with. That was flirted with a couple days ago. And then you've got a 2032 that's got a 204 conversion price. And so all of these have, and you've got a 2028 that's got a 183 conversion price. So
So they're all getting juicy.
Yeah, they're getting juicy. So they're sitting on a lot of capital then, because they've been selling the stock as it was really high, and I guess shorting it. Like, what's the other side of that?
They're short the stock. They're short the stock.
Yeah.
And their long position is the convertible bond.
Their long is the convert. Yeah.
Yeah. So remember that bond converts into stock. So remember, we talked about this last time, where essentially the trade just collapses to nothing, right? The short gets closed out by the conversion of the bond, right? So no, they're not sitting on capital from being short the stock. They've made some P&L, right? Because there's been this big move down. So yeah, I often talk to a friend of mine at a large hedge fund who has huge positions in MicroStrategy convertible bonds, and yeah, I mean, he's having a lot of fun with it. He's like, I used to be a convertible trader, now I'm a DGen crypto trader. He's having a lot of fun with it. But yeah, I mean, when he issued the convert, I can't remember when he issued the recent convert. Was it 2 months ago?
Yeah, there was one about a month ago. Yeah, mid-February.
Yeah, that was when he issued, I think it was a low vol. It was like 35 vol.
Yeah, vol was down. Leverage ratio was down at like, I don't know, 8%, 10%, something like that. Issued $2 billion of convertible debt. And
it was a little bit hard for him to get out of the door. I mean, you can tell the valuation was very compressed. And, you know, why was that? That was because suddenly a lot of these converts were now juicy again. The demand was there, the last convert, because all those other converts were so in the money, there was no juice to trade, right? So the convertible bond guys were like, give me more paper. I want more juice, right?
Yeah, okay.
And so now
in November, when they issued the 3 billion, when the price of the stock ran up to 500, vol was crazy high. All of the existing convertible debt, they're like, I've got nothing to trade because the price of the equity is so high.
Because I'm already so in the money. I'm already on a 95 delta, right?
Got it.
So that doesn't help me. So then when he came to the market, then with a piece of paper, then obviously everybody's absolutely lapping it up.
Just juice.
Right?
Yeah.
Yeah.
Just totally juice.
That bond traded. So I think it issued at 60 vol.
Yeah.
60 implied volatility. It traded to 70 implied volatility. I mean,
which is just crazy for a bond.
Absolutely insane. Like, it's absolutely insane. But it tells you that, you know, that the market was just absolutely. I mean, Bitcoin was a lot more volatile back then as well. So that's also driving the underlying implieds. But the problem that he had with this recent convert was twofold. One, volatility had dropped in the market, but also because of the dynamic of the strike changes, or not changes, sorry, the spot move, bringing the bonds closer to their strikes essentially meant, the stock closer to their strikes meant that there was so much more strategy volatility in the market that was tradable all of a sudden, right? So he'd reopened all of that 5.5-6 billion paper that was outstanding out there.
Got it. Right. And it's back trading again. So there's just a lot more of it in the market.
Exactly.
So, okay, the $3 billion bond that was issued in November, it's got a conversion price of $672. So that one's now significantly, I guess, I don't even want to say underwater because it's got a bond floor, right? It's not even underwater. But I mean, a lot of the community, the X community, has talked a lot of shit about strategy, saying that, you know, they're never going to get these convertible bond guys back in the door because it's like, it just seems like such a short-sighted view and not understanding the full picture of how these funds are managing the trade.
There's a lot of people on Twitter, X, that say a lot of things with a lot of authority, but don't really know what they're talking about. I find LinkedIn is even worse these days.
LinkedIn's crazy.
Yeah, it is. I can't even look at it when people start commenting on MicroStrategy. I'm like, no, I'm not even going to read it.
You just get
It'll
dumber.
just wind me
Yeah.
up. Yeah. But yeah, I look, the market's open. As I said, I think on the last show we did together was, there's always a price. There's always a price, which is what he found last time, right? The market was drowning in MicroStrategy paper. He still did a 2 billion issuance. The price though was 35 volt, right? So, there's always going to be demand. Obviously people are absolutely stuffed in it, but if you go to them tomorrow and you say, hey, listen, I'll give you $5 billion worth of CBs at 20 vol, I guarantee you they'll get sold. So, and this is the thing I always talk about is he is benefiting from the volatility of Bitcoin. We're coming back to that, your nuclear core analogy, which I think is a very good one. Like, no company in the world can issue this amount of convertible bond paper and keep achieving these levels of volatility. Like, he's absolutely drowning the market in his volatility, but he's still managing to achieve it because Bitcoin will always drive the volatility much higher than it would be if you just had a $100 billion company with $10 billion of converts out there, which would just squeeze the volatility of the company to basically zero. But because it's driven by Bitcoin, he's dealing with a much, much more powerful thing. And that's just really is the beautiful thing about what he's doing. And, by his own admittance, he kind of stumbled across this. And I think, the realization was, and again, me as a convertible bond trader, I didn't really think about it too much at the time, but that is the secret source, is the Bitcoin as your nuclear core driving your much smaller company. And again, when Metaplanet do it, and they should do it, they should issue a convert as soon as the market will, allow them to do so, be open to them doing so. I mean, they will get a ridiculous volatility for that. It'd be fantastic. So absolutely, they should be doing it and printing it. And Japan's been a market that's seen an under issuance of convertible bonds for decades. So they will be in demand. That paper will be in demand.
So do you think every company that holds Bitcoin on their balance sheet should issue convertible debt? Like, is this for everybody?
Yeah, because of that exact reason. It's the function of the volatility, right? Yeah. You're getting a cheat code, right? You're getting like you're not getting any. You're getting value from something completely out of your control, right? And that's the volatility of Bitcoin. Right?
Yep.
And as I keep saying, the individual company itself, if you take what's a 100 billion market cap company, you do it. You post the screen of where MicroStrategy is in market cap.
Sherwin-Williams. Sherwin-Williams.
Perfect. How much bloody converts can they issue? Yeah. Right, without completely destroying the volatility of their stock. Right? It would be pretty small. Yeah. Right? 5 billion, they're done. Like done.
Right.
Like volatility goes nowhere.
Right. Because they don't have that nuclear core of Bitcoin driving the volatility. It's just like they're just selling paint, right? I mean, it's just not like their stock isn't moving around.
Yeah. So you imagine you've got hedge funds trading gamma around their convertible bonds. They're desperately trying to eke out the volatility by trading, tighter and tighter spreads around that stock until the volatility just goes to nothing.
It's just zero. Yeah.
Right. Yeah. But MicroStrategy can just keep going.
Right.
Because it's not the stock. Like, it's not going to be a hedge fund guy selling $10 billion worth of stock that will keep that stock down. It's the price of Bitcoin that's driving it. Right.
Yeah.
So that's the thing that is really remarkable about what he is doing. And he's the only, I mean, there's a couple of the miners that have done it, but they haven't been doing it so aggressively. And by the way, we should talk a little bit about the miners, because I was just looking at the mNAV of Marathon the other day. Have you looked at that?
I haven't.
Have you looked at their mNAV?
No, I haven't. I know their stock is incredibly compressed. Are they under? They've got to be close to being under.
I think they've just dropped under yesterday, under 1 mNAV. So, yeah, I mean, assuming Fred Thiel is not running the business into the ground, that looks like quite a compelling company, and they should be issuing converts.
Right, because they can issue it out of the money of their existing stock price.
Exactly. And so you're getting an accretive dilution, right? Whereas if they were to issue stock, obviously that's not accretive dilution at 1 times mNAV. But again, the convertible bond offers you that avenue of accretive dilution, because to your point, you can issue out of the money.
Right. Okay, so I've got to ask about leverage and risk, right? I mean, and you guys are managing this with your alpha fund, right? So strategy today is around, I don't know, 18% leverage ratio on the company. How do you view leverage on these companies? Is it important to you? I mean, obviously there's a narrative around leverage where if the assets fall below the debt value, that starts to become a concern. I think that's something that caused a lot of the big blowups with the last cycle with FTX and Genesis and Celsius, all those companies. But now you have these corporations that are incredibly transparent, outlining what their leverage ratio is, and moving forward to a potential bear market at some point in the future. We might see these companies in strength as opposed to being, completely toast, like if cycles pass. So like, how important is leverage ratio? What does downside look like here? And I guess, what are your thoughts on leverage just in general?
So again, this is why I can't read the LinkedIn posts. I mean, people are comparing strategy to FTX and Celsius and BlockFi and all that nonsense. When you look at, FTX was a fraud, right? They were basically using customers' funds to just trade extremely badly in the market, despite having a massive amount of information on what flow was happening, because they were running an exchange. But they were all dosed up on Adderall and God knows what, thinking they were kings of the universe and trading like absolute monkeys and just destroying value, and lost all their customers' money. So that was just a ridiculous situation that got out of hand. Celsius, I mean, we actually mention Celsius, BlockFi, Voyager when we talk about trying to achieve yield in our marketing materials for the BTC Alpha Fund, because they actually gave us a really good example of what went wrong and what you need to be solving for to get this right. Celsius managed to hit all three. Bad use of custodians, right? Fireblocks managed to lose their backup keys, and they ended up losing $50 million on one particular token.
Okay.
Fireblocks, by the way, did a very good job of sweeping that under the carpet and keeping that out of the press, but it was a big loss. But again, why the hell was Celsius investing in some random token, that had this situation? I mean, I can't even remember the name of the token. Then you have risk management, right? So obviously, when we're looking at a fund, we're looking at the way they deal with risk management. You look at what all of these guys were doing. They were just taking random punts in trading strategies that they had no way of assessing, right? They just didn't have the ability in-house. They just didn't know what the hell they were doing. And then on top of all of that, they had governance issues. I mean, you could call up the CFO of Celsius if you were an Israeli tech founder and tell him a good story, and he'd end up giving you money without any approval from the board. There was no governance protocol of how they were ending up allocating capital. So, I mean, like, every single aspect was wrong.
They ticked all the boxes of what not to do.
Yeah. Exactly. Celsius was the worst. They ticked all three. I mean, BlockFi had many of the same issues, as did Voyager. But when you go and you look at strategy, it's a very different thing. Like, they are buying Bitcoin, leveraging the financial markets, and actually their LTV ratio, as you say, is super low. At 80,000 Bitcoin price, you're looking at an LTV of 20%.
20%, yeah.
Yeah, right. So, or where the market cap was, whether the market cap's irrelevant, but the LTV of the Bitcoin holdings is still 20% on the debt. So that means Bitcoin could fall all the way to
18,000.
Exactly, 18,000.
Yeah. Mm-hmm.
Right. And so everybody's like, you know, you see all these commentators saying, "Oh, well, it will be down below his cost basis, which is 60,000." It's like, that doesn't mean anything.
It doesn't matter.
Right?
It doesn't.
Right? It doesn't have anything to do with the issue or the potential issue for him. So the issue will be the LTV. So the LTV is, as you say, 18,000. That's the price where his Bitcoin holdings value matches the value of his debt. Right. So then you get to the question, okay, so when is that a problem? It's not this year. Even if Bitcoin went to 10,000 tomorrow, no problem.
Still
it
not.
doesn't matter.
They'd be buying all of it. They would be buying as much as possible.
Exactly. Right? It doesn't matter. Why doesn't it matter? Because the debt is not due. I think the first convert is due. Well, you've got the list up there. Was it 2028?
20, yeah, the 27 just cleared, so I think it's 28. Yeah.
27 just cleared, as in it was called. That was the one that was called, right?
Yeah.
Yeah.
Yep.
So you got to look at the puts. So not the maturity, you got to look at the put, right? Because the put is when you've got the right to put the convert back to the company.
Oh, right. Yep.
So the put is the relevant date. I think, though, the first put is 2028, actually.
Yeah. It's like maybe 6 months before the maturity date or something like that. Is that right?
Not normally. Normally, you would have a 5-year maturity and a 3-year put.
Oh, okay. 3-year put. Got it. Okay.
Yeah.
I'll take a peek at that.
Yeah. Sorry, I should have looked at this. But yeah, that's the only time that I think I was discussing it with Ben, your buddy Ben, and he said that the first date is 2027. So we're at the beginning of 2025. You know, you essentially you've got 2.5, 3 years for Bitcoin to have lifted itself above 18,000. Like, and we're a long way from a stress situation.
Yeah,
very long way.
Long way from stress. Leverage ratio is incredibly low, and you've got corporations that are waking up to this nuclear core idea and that are buying as much Bitcoin as humanly possible. I mean, Dylan and Simon at MetaPlanet I mean, they might have 10,000 Bitcoin at the pace that they're going. They're cruising. So. Yeah, and other corporations are going to start waking up to this. So that kind of leads me to some of my next questions is, right, we've got potential strategic Bitcoin, or no, we've got a strategic Bitcoin reserve. I mean, that is real. I guess that's real. The market is really digesting that. I think that's going to take a ton of time, right? It's still not hitting mainstream media at all. Like the world is not aware to this fact, and they won't be aware to the fact until the price of Bitcoin starts ripping, when they eventually start buying, when the US government eventually starts buying, or other countries start to front run the US government. So in your conversations with, capital providers and capital in these alternative markets, I mean, how important is the strategic Bitcoin reserve? Does that increase the credit quality perspective? What's the general theme that you're hearing when you're talking to other capital folks?
When you say credit, are you talking about MicroStrategy?
Not necessarily MicroStrategy. Yeah. Not necessarily strategy, but just Bitcoin in general. Like, are these things important in order to bring more people into the Bitcoin ecosystem? Even with strategy, having a government strategic Bitcoin reserve is it, I mean, perception matters here. Does it matter in the convertible bond market? I mean, we've talked so much about volatility. It seems like it doesn't really matter. But yeah, just what's your thoughts and take on the strategic Bitcoin reserve and how that impacts the marketplace?
Well, to just touch on the convertible bond element for a minute, credit is important, and that becomes a factor in pricing of the convertible bonds. So to your point, when we do start to see a real sort of FOMO event by the nation states, and that'll probably only happen when you start to see the budget neutral acquisition of Bitcoin by the US government being put into play, then I think you'll get a reassessment of the credit of MicroStrategy. I think, you've already seen the credit tighten. I think the estimated credit levels for MicroStrategy on the recent pricing was 650 over, which is, for a company issuing this sort of level of paper is actually very strong.
650 over SOFR?
Yeah.
Yeah.
Exactly.
Okay.
Yeah. So I think what's been really interesting is if you ask me that, 6 months ago, if Donald Trump announces a Bitcoin strategic reserve and says he's going to keep all the Bitcoin that the country own and look for ways to acquire more Bitcoin in a budget neutral way, where would the price be? I would have said 250K overnight. Yeah. We actually went down, and I think it's just remarkable. I think it's really, truly remarkable. Obviously, there's a backdrop of what's happening in the broader
global markets,
risk markets.
Yeah.
So, everybody says, "Oh, why is Bitcoin correlated? It's supposed to be a risk-off asset." Well, Bitcoin's the ultimate liquidity, right? It's the thing you can trade at any time. Doesn't matter if the stock market's open or closed, you can trade Bitcoin, and you can trade at the weekend 24/7. So Bitcoin, until people start to understand A, what it is, but B, that you see more tradable global markets on a more viable 24/7 timeline, Bitcoin is going to be traded like a risk asset.
Right.
So, but again, I was sat with a family office yesterday at lunch, and the guy who leads it, he's a good friend, and he was saying, he's slowly been buying more and more Bitcoin. We've got to know each other over the last 2 years, and he's buying more and more Bitcoin for the family office. But he's like, "Oh, well, look, Rich, should I?" And he started pulling out these charts, these technical charts of the price of Bitcoin. It's like, well, they say if it goes through that level, then it could go to 62K. I'm like, yeah, look, this is all well and good, and you can create a price chart, but there will be a moment when the scarcity of Bitcoin hits the reality of these people trying to trade it, and it is just going to go stratospheric. Because you've got, we're going to sit here, Jeff, all this, and we're going to say, hang on a minute. The US had announced, it was so obvious. This trade was so obvious. We should have been buying as much Bitcoin as we possibly could on leverage and, the rest of it. And hindsight's 2020. But when you're sitting there in the eye of the storm, as he was, who is someone who is now very much a Bitcoiner in the way that he's thinking, saying, yeah, but I'm not sure, it could go lower, and I think I should be waiting and put with my capital on the sideline. I'm like, yeah, you can, but talk to yourself as 6 months from now, and have that version of you ask, was it obvious that Bitcoin was going to be going up? Because, I feel like we get to these sort of moments every cycle where it's just like, you want to just shake people. Like, look at what's happened. Yeah. I was on CNBC earlier this week to talk about, the summit and what had happened last week. And, they said, surely this isn't quite as good as everyone was hoping for because the price has gone down. And I said, look, this is historic. This is absolutely historic. We had never expected that the United States would be making this step. We always thought it was going to be, El Salvador and Bhutan, and no disrespect to those countries, but they are small countries. And maybe I always said Switzerland will be the first of the sort of developed nation countries, just because they are much more forward thinking in the way that they manage the Swiss National Bank's treasury. But the United States, the powerhouse of the Western economy, I mean, Jesus Christ, like you cannot have a more bullish thing happen. It's just right now we're on a lag, and the price of Bitcoin is just a reflection of what's happening in broader risk markets. People completely uncertain, don't know what's happening, and panicked, which is always the best time to buy Bitcoin.
Right. Yeah. And you made a couple comments there, and I completely agree. I mean, Bitcoin is the most liquid asset, the 24/7, 365. So it's really like this, it's like the blood of the economy. It's like, it allows for anything to potentially move. And one thing that I found fascinating is the price of Bitcoin has led moves in the S&P 500 and QQQ and like other risk assets. So like if Bitcoin reverts, those other assets are behind it, and which is pretty fascinating. And I've also seen other anecdotes of strategy leading Bitcoin. The price of strategy flipping positive while Bitcoin's still going down, and then the next day it kind of reverses and goes back the other way. Yeah, it's just fascinating to watch how all of these instruments are trading, and there's the creation of all these new instruments happening. It seems like weekly these days, right? You've got the new Bitwise Bitcoin Treasury ETF. Eventually, there's a couple convertible bond ETFs, Bitcoin-backed convertible bond ETFs that are going to get online.
Oh, really? I didn't know about that.
That's new capital coming into the market. It's going to be an ETF. It's going to be tradable. It's going to have its own vol. Like people are going to be trading the fund of the convertible bond fund. And it's fascinating to see the evolution of this marketplace. One topic that we hit on that was really fascinating last time is credit default swap market. Do you think we're any closer on a credit default swap market for strategy or even some of these other entities? What are you seeing on that front?
So far we haven't seen anything. We have seen implied credit or sort of estimated credit be put tighter in people's models as they're pricing these things, but so far nothing emanating on the CDS side. You will see it happen for sure when he moves into the S&P 500. I did think that the NASDAQ inclusion would be, a potential trigger. A lot of CDS trades OTC. So I wouldn't be surprised that people are starting to write some CDS, although I haven't heard about it.
So haven't heard any. Okay.
I'm not going to say it's not out there already, but yeah, it's close.
Interesting. Okay.
Yeah.
All right. Well, I mean, we're right here at an hour, and one final question that this topic is starting to percolate a lot more is that Bitcoin is now being seen as the hurdle rate. I think it's very clear with the fund that you've come out with that Bitcoin yield is paramount, and that's what people should be interested in these days, not necessarily fiat yield. Does your company look at Bitcoin as the hurdle rate, like when they see projects, or is it a little separate and dislocated?
Not yet. The way that we've been moving ahead with this is, so Mark Sees, my partner, has slowly been more aggressively orange pilled since I sat next to him every day, and he's getting to the point of really seeing that this is absolutely the way that we need to be looking and measuring investment opportunities. It's a process to bring a firm, like ours. Our chairman is a 72-year-old gentleman that founded a private bank. Our board is also very traditional in terms of the way they view the world. When I first pitched this product to them, it was quite funny. They said, why are you proposing such a low volatility fund? I mean, these are people that are investing in Bitcoin. They must be used to volatility. And I'm like, no, you don't understand. Bitcoiners are super conservative. Like, they've understood that everything else is the volatility.
Yeah.
Bitcoin is the constant, right? And if you're a Bitcoiner, you're very conservative with that Bitcoin. You want to be very, very cautious with it because you don't want less Bitcoin at the end of the year. You want more Bitcoin at the end of the year. Right. And so that was very hard for the board to understand. We have a process always with a new product to take it to the board. And I had several discussions with them about this. And it was really some very head scratching moments for them. They were like, the volatility is so high though. And I'm like, no, it's not. One Bitcoin equals one Bitcoin.
It's the everything else is volatile.
Exactly. So yeah, it's a journey to take the firm with it, with myself and Mark. And we are very focused on having Bitcoin on the balance sheet, and that's obviously a way that we can do that is so that any fees we generate will be held in the fund. So we say, oh, we just want to support our product, and therefore that allows us to be allocated to Bitcoin.
Yeah.
So yeah, that's the way that we start. And then of course, as more and more people see what this is and understand what this is, then it becomes more and more landable. But remember, we're FINMA regulated. That's the Swiss regulated organization. And, we have to show that we are operating in a way that they're comfortable with, and the board obviously think about that. And for them at the moment, the board continue to view Bitcoin as a speculative asset. So it's taking me time and education and process to get them to the point of understanding that. But this has been an exceptional first step, and it's the right step in the right direction for this journey.
Brilliant. I mean, well, congratulations. I mean, there's a lot of exciting stuff on the horizon. And I've got plenty of your time now. I'm sure we could talk for hours on end. I mean, we didn't even get into the EU CBDC conversation, which I know we could probably talk about for a while. But Richard, I really appreciate the time. This has been a ton of fun. I really appreciate you sharing your knowledge of the space and your perspective and what you're seeing from on the other side of the pond. And so if you don't mind sharing, where can people find you? I think you've got a podcast of your own, and if you don't mind sharing that. And
yeah, absolutely. So it's the podcast is Seize the Future, SYZ the Future. I try to talk about issues that are really in focus for the world, things like geopolitics, energy security, endless wars, fiat debasement, these types of things. And then I will have an expert on to talk about that particular issue, and then ask them how they're allocating their capital. And of course, often if someone's thinking about particular problems in the world, the way they're allocating capital is to Bitcoin, which is always quite interesting. Even we had a climate scientist on, he was becoming very much a Bitcoin maximalist. So Seize the Future, SYZ the Future. And then I'm on Twitter. I'm quite active on X. I don't know how I'm ever going to call MicroStrategy strategy. But yeah, Richard Byworth, just one word, Richard Byworth. There are a few scammy replications of my account these days, to make sure it's Richard Byworth, all one word, no underscore, nothing.
With the blue check mark.
With the blue check mark, exactly.
The blue check mark. Well, hopefully we can have another conversation again, maybe in a couple months. And ideally, the price of strategy is going to be back up in the stratosphere, and hopefully Bitcoin's back up in the stratosphere. And maybe we'll reflect on this conversation, saying it was so obvious.
Indeed.
So
it really was.
Excellent. Thanks for the time, Richard. Appreciate it. We'll catch you next time.